Hi, it's Amanda and Brandon Neely, and welcome to Grandma's Wealth Wisdom. Obviously, we're not Grandma, but we love her time-tested wisdom about managing your cash flow and leveraging your assets. Today, we're going to be talking about taxable income's Latte Factor. Love lattes.
Oh yeah, I had one just now.
Right, if we're going to talk about taxes, we should talk about them in a fun way, like a latte way.
Yeah, lots lattes to talk about. So lots of people try to send the Internal Revenue Service as little money as possible. They try and find loopholes. They try and find ways to make sure that they don't give as much as they can or want or whatever. And I think that's a good idea, right? But what if you change your focus? That you could get rich off paying your taxes. Like you could get rich off of paying your fair share, right? What if the secret of balancing the federal budget isn't a wealth tax at all, but it is a way of paying your taxes efficiently that makes you wealthy? The average American would love this, right?
Yeah, and I think maybe you took it a little too far. We don't need to get all political and talk about wealth taxes and the national deficit. What we do need to talk about, though, is opportunity cost. Now, the dollar that you spend today could grow into, $100 over time. If you get it growing, that's called opportunity cost. That is $99 that your $1 could have grown into, but because you spent it, it's not going to grow into that. That's what we're talking about with opportunity cost. And opportunity cost is used a lot as a way to convince people to save more and to not buy that latte that they buy every day. In fact, there's a book called The Latte Factor that goes into exactly how to think through, should you buy that latte or that $3 latte or $4 latte, what could that grow into if you saved it instead? No, we don't 100% agree with everything that's in that book.
Apparently, we just bought a latte.
Right, we buy lattes, yeah. But this whole idea of remembering opportunity cost is a really good thing to be thinking about. And we think, the kinds of questions like, what if, instead of thinking about opportunity cost with that $3 or $4 latte, you think about it in the money you have to send the Internal Revenue Service on a quarterly or annual basis. The end of each quarter or on April 15th or March 15th if you're a business. What if you rethought how that money was working for you and didn't lose the opportunity cost on that money over time? Wouldn't that make paying your taxes maybe a little more enjoyable? If you dread cutting that check that, has the Internal Revenue Service as the recipient of it, and then whatever number goes there, and then you got to sign your name and
That's why
pay
you
that.
write the check and I don't.
Or you pay it online if you're able to do that. If you dread that, you're going to love what we're going to talk about today.
We have one of the most awesome accountants. I'm not going to tell you his name, but it's pretty awesome to have this kind of accountant with that name because it just makes it more peaceful.
Yeah. Well, and we can't tell you his name because he is not taking new clients, and he would be so mad at us if we said his name and then people are Googling him and reaching out to him to try to work with him. He'd fire us or something.
He'd fire his clients, yeah.
Yeah.
So we've been super great friends as well, and it was long history where we became good friends, and I think it's important to be friends with your accountant, especially somebody that's doing that stuff for you. But as we were working with him, we shared our strategy about taxes and what we were planning to do, and he was blown away by this strategy. He was like, wait, you're going to do what? That is really smart. I can't believe I didn't think of that. Is really what he saying. But, he's a tax guy, not a financial guy.
Right. And as a tax guy, his focus is on helping us pay the least amount of taxes. And we're really great that he has that focus. But when you set that focus aside for a second and you look at this strategy, it can be really more powerful, really powerful, and make the tax savings that you're getting from cuts or, this loophole or whatever, even more advantageous. So here's what it looks like. You got to pay your taxes. This, we have to tell you up front, this does not reduce your tax obligation. You're still going to be sending the exact same amount to the Internal Revenue Service each and every quarter or each and every year, depending on how you pay. But what you're able to do using grandma's strategy, potentially, this could work for you. It might not. That's still to be determined. But here's the idea. You take your taxes, plus you take other savings, like your medium and long-term savings that you need for the over a year away, and you put them all into grandma's strategy. Be sure you go back and listen to or watch a video that we made called How Much Should I Save, where you can find out more about that medium and long-term savings and how much to put there. But so you put all of those funds, what you're going to have to pay in taxes, and then your medium and long-term funds into grandma's strategy. And then you're able to then take out the money for the taxes when you need to pay your taxes, whether quarterly or annually. But the part that sounds too good to be true, but really is true, is that the money that you're using to pay your taxes, it still sits there in your grandma's strategy and grows as if you never touched it. So in other words, you still get all the opportunity cost, or there's no opportunity cost on those funds. They're still going to grow as if you never sent them to the Internal Revenue Service, which means you get all the growth on every dime that you sent to Uncle Sam, and Uncle Sam isn't going to get that growth later on. So they get to do whatever they need with infrastructure or Department of Defense or whatever, and you get the growth on those funds as well. The key is that as your income increases, your tax obligation is probably going to increase too. And you're going to also want to be saving more for those medium and long-term expenses. So you keep saving. You keep increasing the amount of money that's going to go into this grandma strategy so that you have it there to pay your taxes and to be there for those medium and long-term things too. And because you're increasing the amount you're putting in there, you're going to increase the amount it's going to grow as well. And you're just going to keep getting more and more for you and your future, rather than losing what that money could go to because it's been sent to Uncle Sam.
And that's that previous video where it's compounding and you still have the opportunity cost at the same time.
Yep.
Which is pretty powerful.
Yeah. So this year, it's 2020 when we're filming this video. All the politicians are going to be debating about taxes and promising to lower your taxes. They always promise that, right? We're going to lower your taxes, the average American, the middle class, all those kind of things. The average Joe, your taxes are going to go down. Guess what? You can totally still pay your fair share and make sure you're not losing the opportunity cost of that money for yourself and for your family. And our guess is that those politicians that we see on stage behind those podiums, yeah, that's the word. Our guess, we don't know this for sure, but our guess is they're probably doing something very similar. They're just not going to tell you about it, and it's not going to show up on their tax return, whether those tax returns are released or not.
Yep.
So for more unique strategies like this, be sure to subscribe to Grandma's Wealth Wisdom right here on the YouTubes, and check out the links in the description where you can learn more about this strategy and other strategies that you can use Grandma's strategy for, as well as how to find out if Grandma's strategy is right for you and your unique journey toward financial independence. Check out those links, and thanks for watching and including us on your unique journey toward a smart, stable financial future. We'll catch you next time with Grandma's Wealth Wisdom.